We are going to be talking about what role multi-time frame analysis plays while we are trying to execute trades. So, in multi-time frame analysis, whether it's for intraday or for swing, we will look at the time frame that we are going to enter on, which is the entry time frame, and we are also going to look at maybe one time frame above it or a higher time frame or two time frames above it. So, for example, if you are doing an intraday chart and you're looking at the intraday chart, right, and you're looking at the 5 minute time frame, let me switch to another stock. So we are at the 5 minute time frame here, and this is where you are going to enter, and these lines are basically where the session started for this day and ended here. So the session normally starts at 9:15 and ends at 3:20, at least for intraday, because your broker will cut your positions if you don't cut them already, and we'll have to basically now what this shows, suppose we are at the beginning of the day here, and the 5 minute chart, what it's showing you basically is that the prices are below the EMA 200 and the prices are on a downtrend. Now this is at the 5 minute level, so we can look at the chart at a 30 minute level, and at the 30 minute level what you see basically is swings up and down. So basically price is range bound. You can look at in a 1 hour time frame as well to get a better idea, and just so that we are going to reset the chart so that this is how it looks. Whenever you scroll up and down, the chart gets all spoiled. So if you are trading on the 5 minute time frame, it is good to look at the 1 hour, uh, uh, look at 30 minute or the 1 hour, and you can also look at the daily time frame to get an idea as to what's happening with the price. So I'm trading on the 5 minute chart here, and basically you have this day has not started. Assuming I'm doing this here at the beginning of this day, or I'm doing it for the days to come. I'm looking at past days. So you see there is a clear downtrend. The price is below all the moving averages. Now let's look at the 30 minute one. 30 minute time frame is at least 6 times this time frame. So normally what you have is you should look at least 5 to 6 times the time frame of the entry time frame that you're considering. So if I'm going to look at the 5 minute time frame for intraday, I should look at least 5 to 6 times that time frame to get a better idea of the larger picture. Because the larger picture outweighs the smaller picture, and though you may get whipsaws up and down in your 5 minute time frame, and that is also important, obviously, if you're scalping, but it is better to be on the side of the major trend, and that's why you need to look at least multiples of 5, if not more. So 5 minute you multiple you there's no need to look at 25 minutes, obviously, so we look at 30 minutes. So if you see here, price is going up and down, so price is kind of in a range here. If you see here, price is kind of in a range, it's going up and down, and there is no clear direction here. Price is whipsawing, it's going up and down, so it's moving basically between this box here. And while you're looking at the 30 minute time frame, if you wish, you can look at the 4 hour time frame or the daily time frame to get a better idea of where the stock is headed. Now, if you see here, this showing a small consolidation. Even if you look in the daily time frame, again you have nothing but the same thing. Price is in a range. Price goes up and down. So what that basically means is when the price goes up and down is that there is no clear direction here. In this stock, definitely there does not seem to be any direction here. Maybe in another stock, if you let's look at ACC on a daily time frame. Here again, price is in a range. Price is going up and down. Can you see here? I have worked on this chart earlier, so I've drawn a kind of wedge. So this is basically kind of like a descending triangle. What this helps us to, what this helps you to do is form an opinion as to which side the trend is, and you go with the trend in the minor time frame. The minor time frame is the time frame you take entry in, and if you see here, prices are from here. You have a higher high, higher low, higher high, higher low, higher high, higher low. So prices here are basically like in an ascending triangle, and prices are moving upward and sellers are absorbing it basically, and chances are the price will break through here. Now that is of course a chart pattern that we would probably discuss depending on the occasion, but you get my point here. This is your entry time frame. You're looking at least 5 minute interval, so you can look at the 30 minute to get an idea. 30 minutes shows that it's range bound here. You can look at the 1 hour one. Again, it's sideways, choppy price action. Or you can look at the 4 hour time frame. 4 hour time frame basically is obviously coming on to is again like its prices are slowly moving upwards. They're going up and down and slowly trying to move upwards. And similarly, what you see in the daily time frame also. So this is for, let's look at another chart, ages chem. Ages chem, let's look at the 5 minute time frame. In ages chem, when we're looking at the 5 minute time frame, now we see here prices are below the 9, 20, 50 and the 200 moving averages, and then finally prices managed to close above the 50. But here, if you see here, what you get is barbed wire. Prices are going up and down, and the moving averages are flat. And then from here onwards, all the moving averages start to slope downwards. This is the 5 minute time frame. So what you would be doing is you would probably try to take shots and not try to go long, because the general trend here is the 5 minute. But this is in the 5 minutes. So to have a better look, see what's there in the 30 minute. Again, you see a downtrend here. If you look at the 1 hour chart, in the 1 hour chart, you see a downtrend here as well. If you look in the 4 hour chart, in the 4 hour chart, again you see a downtrend here, but since the session itself is 6 hours, so you can't look at the 4 hours. So look at the hour at the most for your intraday. And if you want, you can look at the daily time frame just to get an idea. So if you see here the last 3 days, you have basically got uh, daily closes. You are getting a daily. For the last 3 days, you're getting a daily close here. And that is the reason, if you look at the 1 hour, you will see that the price is clearly in a downtrend. And obviously, the entry level time frame, 5 minutes. So you have to look at multiples of 5. So we looked at 5 into 5, 25. And then 5 into 30 is 150 minutes, which is 5 hours. So you can even look at the 4 hour time frame. We have looked at 3 time frames now. So this is multi-time frame analysis from your entry to one level higher, which is multiples of 5 or 6. And then again, you have a daily time frame, which is again basically 6 hours, if you will, 6 working hours, if you will, in the daily from 9:15 to 3:15, that's 6 hours, another 15, but that's not for us. So basically 6 hours, because you can only take delivery buy and sell calls after 3:20. So if you take it as 3:15 for that matter, then it's just 6 hours a day, right? So this is how you looked at 5. You looked at multiples of 5:30 or a 1 hour to get an idea of the general trend, so that you can align with the trend. And the trend is your friend. So as long as you're with the trend, the chances and the probability of you making money in the market much more than if you are against the trend. So don't try to fade the trend unless you're a real expert in intraday, and definitely not in swing. Now let's go to swing trading multi-time frame analysis. Now, what is, if you like to take entry in swing trading, which is holding a position for a couple of days to maybe a week or two, or maybe 3, 4 weeks, a month and a half at the most, that's what's a swing trade. That's what defines a swing trade. So then what happens is that you look at the chart, your entry time frame basically is your daily time frame. And when we look at the daily time frame, this is our entry frame. So if you see that the price is in a clear uptrend, and of course it's retraced back for the last couple of days here. Now the daily trend seems to be positive, but what about the weekly? Weekly now, it's five days constitute a week, unless there is a public holiday or something. So that of course is an exception. So you must always, normally you have 5 working days, right? 5 days the stock market is open, Monday to Friday. So In the weekly also, it seems to be up. Can you see here? The last week, we are 28.8% up in ages. So, and then you can look at the monthly as well. If you look at the monthly, now forget the red candle here because we are right now, this is in May, and I was looking at basically April. So, I'm shooting this in the month of May 24. So, and we are looking basically in April 24. So, if you see here, this is also positive. So, monthly is positive. Weekly, again, I'm talking about last week, is positive. And daily, I'm looking up to 29th April only. I'm just looking till the month of April. I haven't gone into May. So if all three are positive, then it obviously makes sense for you to go long. In any case, you cannot go short in swing trading unless you're doing it in futures or you are into options. And I don't teach either of those at the moment because I myself don't trade at them at the moment. So I teach pure equity. So for swing delivery trading, we always go long. And in intraday, of course, you can do shorting and you need to square up before 320. You can short there. But in swing, in delivery-based equity trading, we go long. So it is best to get all your time frames in a row because, for example, let's see whether I can get some contra examples where your daily and weekly are positive, but the monthly is negative. So let me see if I can get you something. Now, if you see here, last couple of days, there's only one positive. So one positive green candle. Let me zoom in for your benefit so that you can see this. This is a green candle, right? Doji, yes, but still it's green. If you see here, slight 0.10% increase. Now, uh, can I go long on a red candle? Obviously not. But still, just for the purpose of analysis, let's see here. So, daily. I'm seeing a lot of red. Let's go to the weekly. If you see weekly, the weekly is also red. If you let's see monthly. Monthly is also red. Now I'm looking at May. I think I should look at no. If you see here, the candle starting from April is green with 6.72, and if we come up to the weekly, so the last week would be 29th April. So this week has got a mix of April. Now this obviously is a week, so 29th April. Let's look at the calendar. 29th April. Yeah, so 29th April weekly will constitute only April. Sorry, let me go here. 29th April will constitute only April, but you will also have this candle coming in because it will go right up to the 3rd. So how do I explain you this? Mm, let's look at another listing. Basically, what I'm trying to show you here is that always pay attention to the higher time frames and go with the trend of the higher time frame. Now, if you look at the daily candle here, let's look at the daily candle. So, if you're looking, let's look at May now. Uh, Although we've had only a couple of days, but let's look at May now. And um, you have your daily candles red, okay? I'm sorry, I'm in the 4 hour. Let me switch to the daily. We have a nice bearish candle on the 3rd of May, and we had only 1st of May was a holiday here. So you have 2nd and 3rd, right? So 2nd, 3rd, and 4th. So we have 3rd April, 2nd, and your 3rd, right? So you have had after 30th April, you had 2nd May, and you had 3rd May. So you had two days here. Now in the 2 days, what we'll do is let's look at the weekly. Weekly is green. Let's look at the monthly. Monthly candle is showing red. Can you see here? My cursor here is on this candle, and this candle basically is showing -1. So from the beginning of the month, we have lost 1.1%. On the weekly, it is showing you 0.29%, and on the daily, you have 1.42. So when you add that all up from the start of the working day of each month till date, you have you will get in the month candle. So do not, for example, if you, by chance, I may not be able to show you the example now if I don't get it quickly, but the fact of the matter is, if your daily is green and your weekly is green, but your monthly is red, you can still go in for it. But if all three are in the green, it would be preferable. But daily and weekly, if daily is red, you will not go in for a long. If daily is green, but weekly is red, meaning last, let's say you've had 4 days in a week. So yesterday's candle was green, but the prior 3 days were red. So the red will obviously overpower the green, depending on, for example, in the 3 days they had 6% down, and you had only 2% up in one day. So net down for the week on that particular day for 4 days would be -4%. So your daily is green, but your weekly is red. Please don't enter long trade because you're contradicting the larger trend. So that's why you need to get all your ducks in a row. Preferably the daily, weekly, and monthly should all be green. If not, at least the daily and weekly should be green. If all three are green, then it's good to, then you have better chances of making money. Now let's look at Albert David because it's showing green here. I'm on the daily time frame. So it's green here, it's red here. And of course, this is 30th April. So let's go for the weekly candle. Now this is green, fine. And I'm not suggesting that you take an entry here. But what I'm going to basically tell you is, let's look at the weekly time frame and see whether we get a green or a red. There, can you see your daily is green, your weekly is red. So over from the start of the week to this date, from the start of the week to the end of this week, you have 2.5% down. So never take entries in swing trading. Never go long when your weekly is against your daily. Your daily is green, but your weekly is red. And let's look at the monthly. Monthly again is red. Now, had this been positive also, you will not go in. You will not enter long trade if your daily is green and your weekly is red. And even if your monthly is green, your weekly sits right above your day. So 5 days constitute a week. And if your weekly trend is red or bearish, then your daily is bullish. Don't enter the trade because the chances of you making a loss are by and large guaranteed. So you basically need to ensure that all the trends are in your favor and you move with the flow. If you're trying to basically row a boat against the current, it's going to be very, very difficult. And even sailors don't do that by and large unless their journey is in a particular direction and they have to go against the current. And for that, they have mechanized boats. So, we are individuals, and it's in our best interest to go with the trend and go with the market. So, look at the market structure, look at the price action. Whenever you look at any trade for swing trading, and I trade on the daily, mind you, you can even do swing trading on the 4 hourly or the 1 hourly, but then you have to sit in the market and sort of becomes like intraday trading. So I will not be even teaching the 1 hour and the 4 hour swing trading because I'm a working professional and I'm sure most of you are. So the best way to do swing trading is on the daily, and if you don't want to do it on a daily, then do it on a weekly time frame. Because on the daily time frame, your entry as well as your exit is going. Your planned exit, target exit will be on will be on the daily time frame, and you don't need to bother. For example, had we decided to take an entry above this candle, just assuming this was a nice bullish candle or a nice pattern where we wanted to, and we took an entry on the high, So what we are doing is we are working professionals. So after the market ends and before the market starts for a new day, when we come home from our jobs, okay, we have a look and we go through all the stocks in our watch list, and or generally we go through the Nifty 500 or the Nifty 50 and we decide this is my entry, this is my target, this is my stop loss. So and we write it down and we put our entry in the system. And once we put our entry in the system, so what happens is that price will uh, either it'll get executed. So once you have a buy order, you can just pick up your mobile wherever you are and just put in your stop loss and target order, and then you're done with it. You don't need to sit and watch the market for your swing trades. That's the beauty of swing and trading on a on the daily time frame. And you can of course obviously trade on the weekly time frame also, where you would take an entry only on Mondays because it's on a weekly. You have to wait for the week to finish, and you enter on the weekly time frame, and then you and once your order gets executed, your stop loss and your target will obviously be put into the system, and one of them will get taken out. Either your target will hit or your stop loss. So let's look at one more chart just so that you get this into your heads, that we don't fight the higher time frames. If you look here, I'm looking at Alchem here, and I see a nice bullish candle, 2.43%. But price is still below the EMAs and just trying to break through. So if you see here, these are lower highs and lower lows, lower high, lower low. And though this may not be a lower high, this is definitely a lower low. And if you are still not getting a hang of where the price is going, all you need to do is this. Can you see price is below, price is hit back. This trend line is acting as dynamic resistance, and the price is trying to break through, but it hasn't. Price is whipsawing, but price is still going below. Can you see here? Closed here, closed here, closed here. Price trying to go up, trying to go up, trying to go up. Then again, bear strike back. Price is here again. Price hasn't broken through. So, but anyway, uh, so this trend line basically will just help you. Okay, where is the price going? Because if you are a newbie and you can't understand what's happening, where is the price? I see up, down, up, down, up, down, and you start to have a headache. Draw a trend line. Okay. So, and of course, the price is below the moving average, is just starting to cross upward. So, this is the daily time frame now. So, I'm looking here, okay, on 3rd May. Okay, green, cool. Should I go long? It's about to break the trend line. Now, let me look at the weekly time frame. Weekly time frame is a doji. Oh my God. Can you see? Let me zoom in. This is a proper cross. It is so flat. Even this is a doji. This is a doji. But this, my God, this is a proper lifeless doji. It's a cross. There is like, although you can see 0.13, but can you see buyers and sellers full fight, and price is like there's just 6 rupee 40 movement, which is not showing at all because it's a weekly time frame. In the entire week, this is what happened. This is a weekly time frame, mind you. And then let's go to the monthly time frame. Monthly time frame is showing 1.4%. Cool. So you'll say, my God, daily is green. That's fine. Weekly is kind of doji, little minus, but monthly is bigger than weekly. So it has more importance than weekly. If the monthly is green, yes, sir, I can go in. Neeraj, sir, I can go in because if weekly is more powerful and higher than daily, monthly is more powerful. It consists of 4 weeks. So if weekly is the father of daily, monthly is the grandfather of daily. So we should consider monthly. No, please don't do that. I told that before. And luckily I got this example. If your daily is green and your weekly is red, don't even bother going to look at the monthly. Don't even bother wasting your time. Because even if it's green, you are not going to go for the trade. So while I want you to look at all of these, your next time frame is the one that is very important. And all three, green or bullish, are better than 2 out of 3. But you can still go in for a trade if daily is green and weekly is green and monthly is red. But if you have other choices, why would you want to go for that? You have 3,000 stocks in the market. Unless all three are green, you should not go for a trade. That's what I believe at least. But if you still want to, if the weekly is positive, go in. And you still want to, then you go in. But preferably all three are aligned in the same direction. It would be good. Do not take a trade if either of the three are bearish. And we go in for bullish trades only in swing. So daily, green, weekly, doji, bad. Not only is it a doji, but it's also negative bad. Monthly, just have a look because since you're looking at it, no matter. We are not going in because all three are not bullish. So I hope you understood. For I'll summarize for intraday 5 and then multiples of 5. So 5 into 5, 25. Take it, you can take as 30 and you can look at the 1 hour. Okay, so that becomes 12 times. Okay, that becomes 12 times. Or you can even look at the daily, but your immediate will be the 30-minute and the 1 hour are the larger time frame. And if it look at the 5 for the 5 minute, 30 and 1 hour sufficient because you're doing intraday trading and you enter on the 5 minute. So try to be with the trend, don't go against the trend. Otherwise, chances of you making a profit are slim. The trend is your friend till it bends, so please go with the trend, don't fight the trend. Unless you're a real expert and you know how to fade the trend, please don't do that. Similarly for swing, I'll summarize. We enter on the daily, watch the weekly and monthly, all three should be bullish, then only you go in for long trades, otherwise avoid. And you can do swing on the 1 hour and 4 hour also, but that will become sort of like intraday trading, so I won't be teaching that. Well, you'll have to sit in the market. You will literally have to sit in the market and monitor when the 1 hour time frame is closing above a rate so that you can enter. But when the daily is there and the market is closed, I just put in my order and then I'll just go in. I'm not even bothering to sit in the market. And once it goes in, I'll get an alert. I just need to check my mobile broker app. If I see the order is executed, all I need to do is put a one cancels another order where either it sells at my target or my stop loss. And your target has to be at least 2:1. Obviously, it's best not to put any target at all and use trailing stop loss, but at least 2:1 is the bare minimum if you want to survive right in the stock market. So I hope you understood what multiple time frame analysis is and why it is important, whether for swing or for intraday. You must follow the larger trends because the smaller trends may be bullish, but the larger trend is bearish. And it will do you no good to follow the smaller trend when the larger trend is bearish because ultimately the smaller trend will fall in line with the bearish trend. So if your larger trend is bearish and your smaller trend is bullish, what that basically means is there is a retracement. So in case of shares that are pulling back to the 200 EMA either on either long side or short side, they are just retracement back to the mean or reversion back to the mean. They don't mean that they are really bullish or bearish for that matter. That's why the long trend is your boss. You got to follow the boss, and that's how you'll get your sauce. I hope you had a good time watching, and I wish all of you good luck and happy learning. Bye for now.